Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is January 24, 2023, where I take a look at the technicals that are supporting or not supporting the major U.S. Currency pairs. So let's get started. We'll take a look at the euro versus U.S. dollar first. We have the I'm going to put a red box around this area right through here, defined by on the lows 1.0760 and 1.08743. On the top side, we have a number. You can see the number of different highs through here where the market came up into this area and found resistance sellers. Admittedly, we had a break above here last week that quickly failed, and then we reestablished resistance against the level right through here. And in trading yesterday, we broke above that level, and it looked like we were heading quickly to the upside, which we did. In fact, the market held the support right through against this old high right here, and then rotated back to the upside. So things were looking good, and then we fell back below that level. In fact, back into the red box, and we started to use that red box again as resistance through here. Until in the Asian session here today, we started to move a little bit above and below, and you could see how the market waffled above and below, failed on the break above the old high right through here this time, and rotated back to the downside. As you can see, over the last few hours, we've seen try to get back outside of the red box, top side of the red box. We couldn't do it, and started to rotate back to the downside here. So it seemed to be trying to put a lid on the euro versus U.S. dollar. What do they have to do on the downside? On the downside, they need to get below the 100-hour moving average. That's the blue line in this chart. And then the 200-hour moving average. That's a green line in this chart. The last time the price tested the 200-hour moving average, it found support here on Friday's trade. And that started to move to the upside here. So that 200-hour moving average is going to be a key level, admittedly, last week. On Thursday, the price moved below the 200-hour moving average right there and a little bit here. We did find support against it here. But those levels, those breaks below that 200-hour moving average failed, and the market started to rotate back to the upside and found support there. So 100 and 200 hours is going to be the next target on the downside. If the momentum can continue in that direction, stay outside of the red box. And if it could do that, then that would be, we'd look for support buyers against that level and see what happens there. Time will tell, but those are the levels in play for the euro versus U.S. dollar. Let's take a look at the dollar versus yen. Just focus on the hourly chart again. And if we look at the move to the upside yesterday, the yen was the weakest of the major currencies. When the dollar yen goes higher, the yen goes lower, of course. We came up to the 50% or toward the 50% retracement of the move down from this high right through here on, I guess that's January 6th high down to the low that we saw on January 13th. And the 50% retracement level comes in at the 139.89 level. Let's call it 131. And the high price sort of moved up toward that level, but fell short by about 10, 12 pips. And then sort of wandered into the New York session, was just getting more narrower and narrower trading ranges as the day went on. In the Asian session, we started to see a rotation back to the downside here, with the yen getting stronger. Can't necessarily say that the low price was anything special from a technical perspective. We would prefer to see the price come down to maybe this area right through here, or maybe the low that we saw right here. But we did sort of work our way toward that level, but we see the rotation back to the upside. We are back above the 38.2% retracement and the 130 level, which perhaps has given the pair a little bit more of a natural support. And we'll see if the price can stay above the 130.098 level, above the 130 level in trading here today. Currently trading around 130.27. On the top side, the 50% retracement at 130.989 is still a key target to get to and through if the buyers are to take more control in this currency pair. But the good news for the dollar versus yen, at least from the buyer's side, is that we moved back above the 100 and 200-hour moving average, and we're staying above that level. And really didn't really get close to it in trading here today. So the buyers are trying to keep control in that pair to the upside here, as perhaps they take Kuroda's actions last week, where he kept rates unchanged to heart after trying to push to the downside after the initial move to the upside last Wednesday. Let's take a look at the sterling versus U.S. dollar. We're seeing a rotation to the downside here. You can see it's pretty sharp to the downside. At this point right here, the services PMI came in a bit weaker than expected, and breaking below the 100-hour moving average was probably a catalyst for buyers to turn to sellers. The last thing the price did here late yesterday was to find support against the 100-hour moving average. Admittedly, we fell below it earlier in the day and could not sustain momentum below that level, but we found support and pushed higher through here before rotating to the downside again. That data seemed to have forced the price through the 100-hour moving average, through the trend line, right through here as well, and below the low price from, I guess, last Friday's trade right through here, and this is going to be our close resistance level, our target on the top side to stay below. If the price can stay below that level, it'll be more bearish. Traders may also look for this level as well as a resistance level, closer resistance level at 123.13. So be aware of that. We're also trading above and below the 200-hour moving average here. Now, that break below the 200-hour moving average was the first break since going all the way back to this date right here on January 6th. So it is somewhat significant to get below that level. Now, we've traded above and below it in the current hourly bar, as you can see, but we are back below that 200-hour moving average. As long as the price can remain below that level, we could see, the bears remain more in control here for this pair. So big sellers here in the sterling versus US dollar. The only problem has gone quite a bit of ways in a short amount of time. So we could see a rotation back to the upside. But watch the 200-hour moving average. If you're a seller, you're still more in control in that currency pair. Be aware. Finally, let's take a look at the dollar versus Swiss might as well, because it's traded at new session highs. We moved up just above the 61.8% retracement in trading here yesterday. We moved above the 200-hour moving average, speaking of, and that was the first time the price moved above that level with any seriousness going back to this day right here on January 18th. Well, it wasn't really serious here because we went above it and we failed and then reestablished the level as resistance here. Really, this day right here was the last time the price was seriously above it for an extended period of time. But we tried to move above it here a number of different times. And we did get a close above it, it looks like, for maybe 2 bars through here, but the momentum could not be sustained, and we rotated back to the downside, came back to test the 38.2% retracement level here at 0.9189 and above the 100-hour moving average, and then restarted the move to the upside, initially finding resistance against the 200-hour moving average, then coming down and breaking through that level. The last thing that we did here before moving to the most recent high was retest the 200-hour moving average. It said buyers, and buyers took the price higher, and now we're breaking above the 61.8% retracement. So those are the nuances of the market that you want to look for. Around these swing areas, around these 200-hour moving areas. Sometimes they don't work, like it did here yesterday. Buyers above the 200-hour moving average were pushed away, but sometimes it does work, and you get a oversized gain to the upside here. And here you might lose a little bit buying above here and selling below, let's say, the 50% retracement level. Here you're buying against the 50% 200-hour moving average, and you got a nice big gain to the upside. There you go. A look at 4 of the major currency pairs. My name is Greg Michalowski, wishing you good fortune in your trading here today. Bye-bye now.